Good morning and thank you for joining us. I'm State Representative Mike Murphy. I represent the 99th House District that covers parts of Springfield and some of the surrounding communities. In the final hour of the lame duck session last week, Governor Pritzker attempted to rush legislation through the General Assembly that would have amounted to a tax increase estimated at anywhere from $500 million to $1.4 billion. That legislation would have decoupled Illinois income tax from a provision in the Federal CARES Act passed last spring to provide support for small businesses hit hardest by COVID-19 by allowing them to deduct additional losses in 2020. Thankfully, the legislation failed to pass during the lame duck session. However, the governor said in a press conference last week that he is planning to push the proposal again and to try to force its passage before taxes are due this year. This is on top of the governor already dealing a serious blow to struggling businesses by not implementing the Blue Collar Jobs Act at the beginning of January and the ongoing shutdown of businesses caused by his executive orders. I cannot adequately express how damaging this is going to be for our struggling small businesses, so many of which are already on the brink of collapse. For those of you who don't know my background, I ran a diner in Springfield for many years called Charlie Parker's. My wife and I poured our hearts and soul into that diner for years, just like every small business owner across the state of Illinois does. Every year, I would meet with my accountant in the summer, and again as winter approached, to review the diner's finances and make sure I set enough money aside to pay the taxes due in April the following year. Then I could start plans for the new year. If it was a good year, I was able to give raises or bonuses, hire more employees, or invest in new equipment. If it was a bad year, figure out how to reduce expenses. This is commonplace for businesses of all types. So put yourself in the shoes of small businesses in 2020, literally the worst year any of them could ever imagine. You just figured out how to stay afloat in 2020, and now at the last minute, the state of Illinois comes to strip you of your last dollar by pulling the plug on tax deduction you were counting on. These people have put their entire lives into their businesses and done everything they could to prepare for the worst. They have used nearly every penny they have had to keep the doors open and hang on to the employees who rely on them for jobs that put food on their tables. It isn't just about saving the businesses for the owners. It's about saving the businesses for the employees in the community who rely on them, not only for jobs, but for the taxes that fund our schools and all the other things our communities need. At his press conference last week, the governor said only a small number of businesses would be affected by this decoupling. Governor, there are more than 400,000 businesses that would be affected by this if they get hit with the decoupling tax increase, Charlie Parker's being one of them. Don't put more of them out of business and kill the jobs that they provide for so many because your state budget is so far out of balance. I will now turn it over to my colleague, Representative Reick.
Thanks, Mike. I'm Steve Reick. I'm representative from the 63rd District up in McHenry County. A little bit of background on the CARES Act. It was signed by the president in March, and it contained provisions that allowed businesses that had incurred losses in 2020 as well as losses in 19, 18, and 17 to carry those losses back and get a refund of money that was paid in taxes by offsetting income that was earned in prior years. We learned during the floor debate that the Illinois Department of Revenue was says it was unaware of this provision and how it would affect Illinois taxpayers, business taxpayers. They were unaware of it until October. But on something that was passed in March. The literature was all over the place talking about this back early on after the signing of the CARES Act. In fact, New York voted to decouple from the CARES Act in May of last year. We were in session in May, and we could have dealt with this issue in May when we were in session. This would have provided business owners like, Mike was talking about, the opportunity to plan for what was going to happen to them, what was going to, how this was going to affect them. But nobody said a word in May when we could have done something about this. The governor made no announcement that he was going to propose decoupling in veto session. I know veto session was canceled because of the pandemic, but he said nothing when we were still thinking about going into veto session. Again, that would have happened at least in 2020, and there would have been some opportunity for planning. He didn't announce the decoupling until January 6th. And at that time, he said it would save the state $500 million. In the floor debate, we subsequently learned that the number was closer to $1 billion to $1.4 billion. So this is not something that's insignificant. Also buried, this decoupling was buried in a bill containing provisions that Republicans were in favor of, use tax provisions, things like that. We were going to vote for the bill, but then decoupling was put in, and this became a poison pill that made it impossible for us to support the good things that were otherwise in Senate Bill 1199. When asked, I asked the sponsor of the bill at the floor debate that was the $3.9 billion that was projected as our deficit in May when the budget passed, was the $1 billion baked into that number? And he said he thought it was. I don't know how it could have been baked in there with the fact that nobody knew about it until October, but that begs the question: is our deficit 3.9 or 4.9 billion dollars? The sponsor couldn't answer that question. Something important to understand here is that Illinois is what's called a rolling compliance state, which means that changes to federal tax law are generally adopted by Illinois tax law unless there's specific legislation to decouple, much like we have right here. It's important to note that because this decoupling doesn't affect McDonald's or Boeing or ADM or Caterpillar or the big C corporations that make Illinois their home. It only affects those businesses that report as pass-through entities, subchapter S corporations, LLCs, limited partnerships, and sole proprietorships. So when the governor says there aren't that many companies that are going to be affected by this, Murphy's right. There's a whole lot of companies that are going to be affected by this, and they're all the kind of companies that are being folded up and shut down during the pandemic. This can be only one of two things. It can be incompetence on the part of the Department of Revenue for its failure to understand what was at stake here until way late in the game. Or it is nothing more than rank cynicism. The governor was pushing hard for his fair tax proposal, constitutional amendment on the November ballot. And I hate to think that the governor was sitting on this decoupling idea, putting it in his back pocket, waiting for us to vote up or down on the fair tax amendment and then unload this thing. I don't want to think that the governor, having lost the fair tax vote, is now running around going, where are we going to find more revenue? And oh, by the way, here it is. A tax increase passed in the dark of night, 3 o'clock in the morning, during lame duck session. I don't know what you're going to think about this. I know what I think about it. I think that this thing was baked long before we got around to talking about it during lame duck. The fact that other states were on top of this, giving companies a chance to do some tax planning while Illinois didn't learn about it, or at least says it didn't learn about it until October and then chose to sit on it until January, is an example of either incompetence in the executive branch or cynicism over messaging for the fair tax. There's no third alternative. I'm going to hand it over now to my good colleague, Mike Marron. Mike, it's all yours.
Thanks, Steve. Good morning. I'm Mike Marron from the 104th District, which includes parts of Vermilion and Champaign counties. For the last 10 months, I've been receiving phone calls, emails, text messages, Facebook Messenger messages from small business owners in my district who have been devastated by the governor's executive orders and who have asked for my help to try to get them some relief so that they could keep their businesses open. There was a couple who I know who were married right out of high school, neither attended college. They worked every day for 20 years. Sometimes they both had 2 jobs, saving everything that they had so they could purchase a small business just 10 years ago. When they made the purchase, they didn't have enough money between the 2 of them to meet their payroll, which was due in 2 weeks. They called me right before Christmas. They were panicked, not for themselves, but for the employees that they were going to have to lay off right in the middle of the holiday season because of the governor's shutdown. There was a hairdresser in the little town of Westville who was shut down for 2 months and finally received some PUA relief from the federal government, and then recently got a letter from IDES demanding repayment of thousands of dollars that she had already spent to live on. There was a restaurant owner in a small town whose restaurant makes up the very fabric and soul of that small town. The owner went to the same high school as me. He was a little older than I was. His sister was in my graduating class. They came from a hardworking blue-collar family. He spent his entire life savings 5 years ago to buy the restaurant and turn it into an overnight success. He was getting ready to finish paying off debts and start much needed capital investments in his building when COVID hit. 2 months after the governor's first executive order, he was contemplating closing his business for good. These people did everything they were supposed to do. They worked hard. They saved their money. They took risks, calculated risks that worked out, and they obeyed the governor's executive orders. They were put in this position through no fault of their own, but instead by the decisions of one man. I understand that J.B. Pritzker believes that all businesses in Illinois are rich corporate fat cats that sit around a boardroom in a high-rise building, and that the corporate reserves of these businesses mirror the corporate reserves of the Hyatt hotel empire. But these 3 examples that I just mentioned are what businesses look like in my district. It's unbelievable to me that we are now going to decry the budget deficit and call for fiscal responsibility on the backs of these small business owners who have had their lives upended by this governor. I find it ironic that we are insisting that this bill has to pass for the sake of fiscal responsibility, since when it came up in the middle of lame duck session in the middle of the night, it all happened right in the middle of the Democrats passing every pillar of the Illinois Black Caucus agenda. Those pillars are estimated to cost the state budget anywhere between $5 and $10 billion additional dollars. No one who voted for these budget increasing initiatives during lame duck session gets to hide behind the mantle of supporting fiscal responsibility when they're pushing this bill. Governor Pritzker needs to educate himself on what small business really looks like in Illinois. It would be nice if he showed some empathy for these small business owners who have been devastated. It would be nice if he had the courage to come to a place like Danville or Rantoul and look these people in the eye and explain his actions to them. I've been waiting on that for 10 months, and quite frankly, I've given up.